What is going on, everybody? Welcome to another episode of Ask Coinsquare. I'm here with a very special guest today, CFO and co-founder of Neptune Dash, Troy Wong. Thanks for coming on the show today.
Great to be here.
The question for you today is, where are we on this digital currency adoption curve? We've seen these massive run-ups in 2017. Where's this space headed? Where are we at right now? And where is it going in the future?
Well, Kevin, I think you've asked sort of like the magic question for any sort of outside party that actually hasn't gone into the space or studied the space. And the big question is, are we in a bubble? Right? And of course, as a digital currency advocate, I would of course say no, we're not in a bubble. And the reason why I'm so certain of that is I've done a lot of reading and networking with different cryptocurrency experts, and a lot of really smart people and a lot of people who are very, very intellectual. And they're very, very clear to promote this idea that the adoption of digital currency should not be viewed as the adoption of any other type of asset class or commodity, or even worse, a company. Right. So when you see sort of like these parabolic S curves up, and we like to say in venture capital is a hockey stick to the right, everyone will suddenly jump to conclusions that we're in a bubble, right? But that's of course if you're assuming that you're already in a mature market and that it's some sort of company, right? And we as sort of digital currency advocates, believe that digital currencies are like more comparable to the adoption of a utility good. Very similar to the adoption of electricity in the early 1900s, adoption of television in the early 1950s, and the adoption of the internet in 1995, right? And so what happens is during these, what happens during these adoption curves, it's called a S-curve adoption, where you have a small network effect up here, where the infrastructure to support that specific utility is built out, and then you have a massive sort of sudden S-curve adoption all at once, where in a very, very short period of time in history, sometimes it's 5 years, sometimes it's 10 years, almost the entire global population, if possible, adopts this type of utility good. And we believe at digital currency, as digital currency advocates, that that's exactly sort of what's happening. So you should never look at the adoption of digital currency or the valuation of a digital currency like a stock, a bond, or any other commodity. You really need to compare it to the adoption of electricity or the adoption of the internet, something like that. And that's when you start really sort of taking a step back and understanding, where we are in the adoption cycle, and what sort of transformational changes are going to happen as a result of these types of commodities. That doesn't mean that we aren't going to have sort of short-term pullbacks. We all know what happened in 1999 and 2000, where we had the huge sort of technology bubble that happened in the US and Canada to a lesser degree. But that doesn't mean that we all shut off the internet, right? And so do I believe that we're going to see sort of like these bull bear markets and these sort of dramatic price runs and sudden market pullbacks? I absolutely do believe that we're going to see that. And the reason for that is because this is the first time in human history that we are seeing the adoption of a utility good that's priced in real time in an open marketplace, right? And so I don't want to say that it's different this time, very similar to every bubble they say it's different this time. But it is a little bit different this time in terms of the order of magnitude network effects that can happen with the adoption of digital currencies globally. So that's kind of how I like to think about where we are in the state of the market, in the state of the state of the adoption curve. I compare digital currencies more to that of a utility good versus an independent commodity or company, which is what most people on TV compare it to.
Yeah, you see a lot of people confusing digital currencies with companies, but the companies are, they're tethered to their cash flow versus a digital currency where it's untethered, it's driven by demand, and there's not necessarily the same fundamentals behind it.
Absolutely, and another thing that people need to get comfortable with is the volatility in the space. So if you are a typical sort of retail investor that's familiar with sort of junior mining stocks, then the type of 10 or 20% volatility per day is something that you're going to be comfortable with. Right? And that's very, very similar to the ICO market that's beginning to develop right now globally, right? You see these tokens that are being offered to the general investing public globally. You're seeing huge volatility runs in terms of it's normal. I would say the typical price change on a daily basis would be 5 to 10% minimum, right? And you'll see tokens both on a liquidity and a pricing standpoint go from 1x, 2x, 3x, 10x, 20x sometimes in a single week or a single month. And the reason for that is that the ICO market, or this digital token market that's emerging, is almost like an untethered venture of all venture markets. And it's completely unregulated, right? Which doesn't mean that it's a bad thing. It's something that's new, right? It's something that we're exploring together and sort of looking at what happens when you have these truly unfeathered, unregulated markets over time. And so I want to caution investors to sort of like begin to learn about this space and learn that like the ICO market and the digital token market is a highly sort of volatile venture market, and that's not a bad thing.
All right, thank you for your take on this. That is all for today's episode of Ask Coinsquare. Leave us your comments and your digital currency questions down below. Your question could be featured on the very next episode.